As the calendar year-end quickly approaches, your business fiscal year-end or 12-month business cycle may also be coming to a close. Even if it isn't your fiscal year-end, this is still a good time to make sure your books are in order for the start of a new year. In today's video, we'll go over the checklist to guide you through this process. The year-end accounting checklist for small business owners. Number 1, make sure your books are up to date and organized. If you haven't been entering your receipts, invoices, or payments consistently, this is the time to get it done. This is also a good time to review some of the less frequent expenses that your business may incur and make sure that they've been entered as well. Finally, you may have interest statements from investments that your business has made. You'll want to make sure those are in order for your accountant or bookkeeper as well. Number 2, reconcile your bank statements. Whether you keep track of your books online or on paper, you need to ensure that they match up with what your business's bank and credit card statements say. Again, with some of the newer software programs on the market, this may be quite easy for you as the program will keep track of it. If you don't have a program that does this for you automatically, you should be reconciling them on a monthly basis. Either way, now is the time to ensure that everything matches up. Number 3, review your financial statements. This is a good time to take a look at your income statement and balance sheet to make sure that things look correctly, or as they should. If something doesn't seem right, it's obviously worth a closer look. More specifically, your income statement will show you your business's revenue earned and the expenses that were incurred, while your balance sheet will show you assets and liabilities and the equity in your business. One of the things to look for is whether the balances are significantly higher or lower than you'd expected. Other things to look for include an unexpected negative balance or any unexpected extreme differences from previous years. Number 4, accounts receivable. As a business owner, you likely stay on top of your invoicing and receivables. Even if you do, this is still a good time to review where your accounts receivables are at and your invoices. This includes revisiting any invoices that have yet to be paid, confirming whether or not they are still incoming or if they simply weren't entered as of yet. Number 5, accounts payable. Now is also a good time to check your accounts payable. This will also be easier if you've been staying on top of your record keeping, or you have a bit of work ahead of you. Either way, you'll need to know if your payables are getting close to being due so that you don't have any late payment charges. You may also decide to pay your bills early if you want that reflected in this year's taxes. Number 6, inventory. If your business carries an inventory, you'll need to perform an inventory count for year-end. This is done by physically counting the inventory so that you know what you have and its value at year-end. Depending on how much inventory your business has, this may be a simple task or one that takes a great deal of time and staff. Make sure you plan accordingly so you don't run out of time. Number 7, review your deductions and changes to your business. The Canada Revenue Agency may change what can and cannot be used as deductions, or they may change the amount that can be deducted. This is a good time to check with your bookkeeper or accountant to see what can be deducted and gather any necessary documentation for them. Finally, you'll need to find paperwork regarding any new equipment or other significant purchases that you've made this year so that your accountant or bookkeeper can add them to your assets accordingly. Likewise, if you sold any equipment or other assets in the last year, you'll need to let them know so that they can be written off on the books. Number 8, plan your taxes. It's always best to review your financial statements quarterly, including your income statement and balance sheet, so that you're aware of how your business is doing and to help you plan short and long term. It is always better to prevent any surprises at tax time that could be avoided with this review. For example, your bookkeeper or accountant can let you know if you should be making equipment or inventory purchases now instead of early next year in order to help reduce your tax bill, or this may be the time to possibly reevaluate your business structure. Number 9, reflect on the year. Now is a good time to look at the last year and reflect on how it went. This applies to your entire business, especially now that you've had a chance to evaluate this year's financial statements. This is the time to evaluate if you've met this year's goals, if they were realistic or if they need to be adjusted for next year. This leads to our last point, number 10, set your goals for next year. Once you've taken a look at this last year and evaluated how well it went for your business, now is the time to look to next year and plan for the year ahead. Whether this be a possible change of direction, growth, purchasing new equipment, or tax planning, this is a great time, so start your planning. Need help from an expert? We understand that some of this may be more than what you want to take on at year end. Let one of our experts at Valley Business Center help. For over 30 years, Valley Business Center has been providing comprehensive bookkeeping, payroll, and tax services to our clients in Whistler, Squamish, the Sea to Sky Corridor, and Metro Vancouver, BC areas. Valley Business Center provides reliable and effective services to all clients. Don't forget to hit that subscribe button and also click on the notification bell to get more helpful information. Thank you so much for watching.